today we're talking about building a 𝘊𝘃𝗃 portfolio investing independent, okay?
I'm 𝘊𝘃𝗃𝗿, the CEO of moomoo Malaysia. Thank you.
Hi, I'm Kathlyn. I'm the founder and also chief trainer for 𝘊𝘃𝗃𝗿. Yeah, we are an educator on financial and investment and trading education in Malaysia.
Good morning, movers.
Okay.
My name is Zeff. I'm from Sharix. Currently, I'm a researcher and chief trainer in Sharix. Nice to meet you all today.
Excellent. So I think essentially today we do want to unpack the different dimensions of this, but let's start off with the first question. In your keynote, Dennis, you mentioned that 2 in 3 Malaysian investors have a favorable market outlook for the second half of the year. Now, what do you think are the key factors for this high optimism and also this mix of risk-averse and risk-takers in the crowd?
Okay.
Thank you. Before I share my views, I just need to do a compliance disclaimer. I'm not here to provide any advice, and I'm not listening to.
Yes.
I think why Malaysians investors are positive, basically just sums up in 3 points from the survey. I think first is having a very clear government policy. It definitely helps from the local business condition, as well as attracting foreign direct investments. Second point is the current global economic conditions, together with the US and China tensions, which it makes Malaysia as a very strategic partner in the short term. I think the last is the most important, is having moomoo to provide features such as real-time data, AI-powered tools, as well as education resources, and help Malaysian investors to grow in confidence and make more better choices in terms of their investment. That will be my view.
Well, thanks for that. I mean, we're talking about shaping the future of Malaysian investment here. Now, thanks for that great start. Now, the next question, 1/3 of Malaysian investors are now spending more time researching trades before executing them based on a recent survey of moomoo users. Now, from your perspective, Kathlyn, how critical is it for financial literacy programs and financial education to evolve in response to this shift in behavior? And also, what specific areas of financial education do you believe require the most attention today, especially with the current market environment?
Okay. Yeah, thanks for that. I can see a very major shift from the time I started investing. I started investing way back in 1993. That's 31 years ago. Without having a proper tools, right? Basically, I listen to my colleague and I buy stocks in the Bursa Malaysia. Then I encountered the 97 financial crisis, 1997. Anyone long enough in the market to experience that? Okay, we have one. And that's when I realized that I need to learn it properly, right? I cannot just listen to friends. And during that time, I still need to call up the broker. At that time, TA Securities, I still remember. Right, and in the 97 crisis, you cannot reach them, right? The phone is too busy, and that made me realize how important it is. So I urge every one of you to actually learn it properly, because the market is very dynamic. You don't get into the market without knowing what you are doing. And these days, what I've understand over the many years, 40% of the market movement is based on the macro, right? It may not be stock specific. So understanding the stock itself is actually not enough, right? So understand what is happening around the world, like our currency movement. The 30% is the industry trend. Remember the mega trend when we have AI mentioned just now? Mega trend drives a big wave, including a lot of stocks in Malaysia. The big move is on data center, right? And the 30% is on the stock, right? So understand how to approach the financial market. And this is what I would suggest. Instead of just getting into the stock market directly, in order to get consistent result, you're not just buying stock, right? A lot of people make this mistake. Their friends want to buy stock, and they say, we have a lot of people want to get into even like cryptocurrency without a proper approach. Number one, you need to have is a systematic approach to the financial market. How do you approach it? There will be a proper way to select the right stock, proper way to time when to buy, when to sell, proper way on how you manage your risk management. What is your exposure per trade and as an entire portfolio? Then only you talk about using leverage, leverage like options or stock with margin, right? There is a systematic way to do it. Don't treat it just like a hobby, okay? Yeah. But if you approach it the right way, that's where you can systematically build your future, right? So you have systematically grow rather than have random success. Yeah.
Thank you, Kathlyn,
yeah.
for that.
Okay.
Next question,
Yeah.
Zeff, this one's for you. Now,
Yeah.
for many investors in Malaysia, the process
Yeah.
of building a diversified and resilient portfolio
Yeah.
can seem daunting. And
Yeah.
so just adding on to the
Yeah.
previous points, right? Kathlyn,
Yeah.
you mentioned that really important point at the
Yeah.
end. Now, in your experience, what are the foundational principles, the core principles that investors should adhere to when beginning their investment journey? Now, how many of you consider yourselves new investors in the crowd? Can we just get a show of hands? Don't be shy. Excellent. Yeah, you see, so we've got people who are just starting out, and they're really looking for guidance. So I think we're here at this fireside chat to really help guide you and empower you, right? So thank you for being here, all the new investors in the crowd. Now, the next part to question then is how then can they effectively align their portfolios with both their financial goals and also the market trends out there?
Thank you, Olivia. So I actually started my investment journey more than 10 years ago when I was still a university student. So I think most of us, when we first started as our investment journey, we don't have a real goal. We just want to make quick bucks. I think this is the main thing why a lot of people, they cannot make money in the long run in the stock market. So in my opinion, I would say that most of the people or most of the friends in the investment circle community that I met, most of them, like maybe 70 or 80% of them, they can't actually make their portfolio perform well, even if compared to the benchmark. When I say benchmark, which means the 𝘀𝘃𝗿. As you know, for the past 10 years, except this year, for the past 10 years, 𝘀𝘃𝗿 actually don't really perform well, but their performance is even worse than that. But fortunately, starting this year, our market starts to be more vibrant. And I think that most of the people, they do not have a goal, and then they don't have a strategy. Because when you don't have a goal, you cannot derive a strategy to build a resilient portfolio. So in my opinion, I also think that when we view ourselves as an investor, first we need to set our goal very clear. Just like, for example, today, if you start your car engine, you have to know which destination that you're gonna reach. It's just like setting up your Waze or GPS. So I think that the first step that you should do is that first you understand your characters. Whether are you a fighter, or are you someone who is risk averse, or are you a hybrid? Like for me myself, even though with the 10 years of experience in the stock market, I still consider myself new. Just now I was shy to raise up my hand, but deep in my heart, I actually consider myself still a newbie. Because in stock market, we think we always need to have this mindset. We are a newbie, and this is a lifelong learning process. And with this, then you can actually find out your characters, whether are you a fighter or are you someone who are more conservative, and then you strike a balance in between. For example, if let's say someday you encounter a strong team, a mega trend, you cannot just put all the money in the basket, put all the eggs in the basket and close your eye, and we use the local term 𝘁𝘁𝗿𝗄𝑑. In Malaysian, we use the term 𝘁, which means you close eye and buy 100% or 50% all in. A lot of people that they don't really success in stock markets, that they have this kind of mindset because they want to get rich very quick.
Yeah.
And then if they are lucky, they win. They make the money, but maybe a few months or a few years after that, they lost back the money that they earned because the money, they cannot actually handle the amount of money they win from the market. So this is my opinion. So first you have to find out your own characters that shape the strategy, right? This is my first point. So I pass my back to Olivia.
Okay.
Thanks, Zeff, for that. I think you brought up a good point about 𝘁, right? I think it's a lingo that's being used.
Yes.
So
Maybe across Malaysia and Singapore.
Right. So with this metaphor, I think a lot of investors I do think that a lot of people do fall prey to sort of like that kind of get rich quick scam, right? So I think even 𝘀𝘀 Malaysia during his speech just now, he brought up the idea of financial scams and just, people just falling prey to these things. Now, how is moomoo then, being part of, just shielding people from this, or at least, helping them to the right path, Dennis?
Be a moomoo user, be a moomoo client, definitely will solve the problem. I think that's a simple answer. So the reason I say that because, as I mentioned, I think Kathlyn mentioned as well, Zeff mentioned that you need information, you need tools. I think the other part, the other additional point is that we do have a community where you can share things that learn from each other from other experts to validate some of the news or rumors in order before you making any decision. I think the straight answer is become our user and our client. Then we will share, we'll educate you, become a better investor.
Thanks for that. Now we're going to take a short break here to do a quick poll session with everyone, okay? So if you see this QR code right here, do scan it above me. I'm just going to stand over here and give you about 30 seconds. I would like everyone to take out their phones. And also the gentleman above right there, if you want to participate as well in this interactive poll session, we want to find out in this crowd right now, how many of you, when do you actually think about your financial decisions, whether it's saving, investing, or planning for the future? And I think equally as important, what's the primary goal that's driving you, okay? So definitely submit your answers right now. I'm going to give you another 30 seconds. Okay, we see the real-time answers coming in. It seems that 98% are actually driven by the goal of financial freedom and reaching a stage where they can live off their investments and savings without needing to rely on a job. We have some people under children's education, buying a home and retirement. We'll wait for just a couple more to submit their answers, but I think we do have a clear winner here. Okay, so it seems that, that number dropped from 98% to 92. And we got more people putting it under buying a home. Okay, very interesting, because we got a mixed approach here, right? And also I asked you that key question at the beginning, what kind of personality type are you when you're investing? Now this does give us a more detailed reflection of the crowd. Now to our panelists, any thoughts on this?
That was one of my priority initially, and I was working towards that, and I was able to leave my full-time job in an MNC in 2008 and become a full-time trader. Yeah, so this resonated with me a lot. Yeah.
Zeff?
Before I quit as a pharmacist to become full-time investors, I do actually have this goal as well, financial freedom. And I think today's, our team, 𝘀𝘀 with moofest is actually fits completely into the 93% voted goals of all the investors today, which means that all of us, when we step into the stock market, we are trying to strive to reach a stage whereby we call it financial freedom.
I do have some insights in this journey I'd like to share with you. I guess a lot of people may have some similar aspiration. I was working, when I first started trading in Bursa Malaysia, that was my second year of my work. And I was working for Advanced Micro Devices, AMD. So I worked there for 5 years, then I moved to Intel for 12 years. And in my last role, I managed 102 people. So it was pretty stressful, okay? And I have to manage people, there's a bell curve. I need to manage people to put people in a quota system. It is a very interesting job to me. I like factory automation, right? So that was my last role, managing a factory automation team, but it comes with a lot of stress. So at that time, I thought it would be okay. I'm still interested in my job, and I thought that it was a great pay at that time. I thought that if I continue to work until I retire, I will be financially free. But when I worked out my financial plan, that was year 2005. I worked that out. And I was shocked, actually. That is not enough. You know, way back in mid of 2008, my last drawn pay at the time was close to 20,000 ringgit. Do you agree that with that kind of pay, it's still considered pretty good, right? That's 2008. And how many of you would think that that should be sufficient to retire financially free if I continue to work in Intel until retire? How many of you think so? Yeah. But the sad reality is not. Guess what's the reason? Inflation. It's like, how many percent is the inflation? Let's take a wild guess over here. How many percent? Just shout it out. How many percent? 5. Just show your hand. 4, 5. Anyone? 10. Okay. You know, when I did a poll in most of our seminar, it's between 4 to 10% the responses. From my experience, it's at least 6%. So when you factor in inflation, it's actually not enough. Yeah. So that was my wake-up call. Even though I've invested for a long time, part-time, I never took it as seriously until I did my financial plan. And I urge every one of you to do that. You know, just a simple one to get you started, plus the inflation. So I took my investing and trading seriously. So since 2005, I focused at least 1 hour a day at night after my work. No matter how busy, 1 hour a day. Yeah, I worked my financial goals, and after 3 years, my part-time income was enough to replace my full-time job. So I left Intel in mid-2008. And it was great. I know where you're thinking, right? Wow, so fantastic to be able to leave the job and, you know, don't need to work for corporate. How many of you would like to achieve that? Raise your hand. Right? No need to work anymore. It's great for a few months. After that, you'll get bored, okay? Because no social interaction. And you will feel a bit, what I felt is just you and a computer, right? It's not a lot of meaning in life. And that's when I realized that I want to do something I'm passionate. The great is you have your time, you have money, but you still want to do something meaningful. And later I discover education is what I'm passionate about. Right? So I think when you think about the first one, it's the first stage, but think about what do you want to do when you have the time and the money. That will make your life more meaningful. Yeah.
Right, that's an important point about impact as well.
Yeah.
Thank you for sharing your story.
And that will really drive you. You know what I've experienced? A lot of our students, we have more than 6,000 students in this financial education. We have been existing for 16 years. The thing is, when they face a more challenging market, you know, when they get busy in life, they don't pursue it anymore, right? They just get busy. They never mind, you know, just put it aside because they didn't calculate the numbers. Because it's just a should, you know, nice to have. It's not a must. For me, it's a must, right? And I like you, when you work out your numbers, you will realize it's a must. Investing is not a should anymore, right? So work that out so that no matter what, you know, good times, bad times, you know you still need to work on it. No matter how busy, you put in some time. You're too busy, you do investing, right? You're less busy, you have more time to build up compounding, you do trading, right? But I will encourage you to understand, like, you know, what Zeff say, know who you are, right? So over the years when we educate, we realize there's not one size fits all. Last time I used to teach what I trade, you know. I realize everyone is different, right? Know your horizon, like whether you're long-term, mid-term, short-term, and whether you're suitable for fast-paced intraday, whether you can control your emotions, and find something suitable for you and focus on mastering it. Don't attempt to trade everything in the world, right? There's too many things to trade, okay? Yeah, so that's my advice. But take your journey seriously, and you will get there. Because it just took me 3 years when I took it seriously, and I was able to do it. Yeah, thank you.
Right, so just to summarize some points in this. Yes,
Yeah.
of course.
Okay, thank you.
Great points.
Yeah.
They're very comprehensive. But
Yeah.
I love that point about how it's not a hobby, it's a must.
Yeah,
You
it's a
must
must.
have this, and that, you know, it's all about planning as well and making the time for that.
Yes.
Investing the time and
Yes.
the effort to
Yes.
do that in a disciplined way. So
Yes.
thank you so much for sharing that. Now, my next question, also still on this slide. So we've got financial freedom and we've got retirement, right? So we've got, of course, the key term FIRE, and we know that's a key term used also with the Gen Z community and all that. You know, a lot of young people nowadays, and those who come onto my community as well, they're like, how can I achieve FIRE, which is financial independence, retire early? A lot of them are polluting the two together. Financial independence is retirement. Are they the same or are they not, and how can we distinguish the two?
Maybe I would say if there is some sort of difference between when you achieve financial freedom and when you try to look for retirement. So when you have to look for retirement, because different people, they have different goals in retirement. For some people, they may just want to retire safe and sound. Like every month I have 2 or 3K to spend, every day I just live like normal. And then while there are some people whereby they have this type of thinking, after they retire, they want to travel around the world. So I would say that's why you have to, back to my point during the initiation of the discussion, you have to know who really you are. Like what Kathlyn had mentioned, there is no so-called one-size-fits-all strategy. So you have to tailor-make yourself the strategy based on the goals that you want, based on the characteristic or your personality. Then that's very important. Yeah.
Dennis?
No, I'm not expert, but what I can say is I'm still working towards that objective.
Yeah.
I think what could the technology helps in terms of what Kathlyn and Zeff mentioned is about selecting your investment. Like Kathlyn said, that you shouldn't focus on one specific product, diversify your investment. That definitely with technology will help you. And also understand the risk appetite. Before you invest, that would be my point.
And for the last point, of course, not to neglect children's education, we got 7% that put that in there. Now, I know a lot of long-term investors as well in the crowd, and I would love your insights on this, maybe if it's related to portfolio or just your own personal experience.
Yeah. In fact, something just came out on the last point recently. I have a student who is already a retiree, right? The wife is still working. And recently, suddenly he says, okay, I was thinking, or maybe I want to have a job again because the wife wants to retire, okay? But he was working, they sent one of the children to international school. The expenses is about 13,000 ringgit a month. Yeah, so when the wife, so initially, he has already, he get an investment return. He's a very passive investor, about 20% return per year. He's happy with that, retired, because the wife is still working enough to, sustain the normal life, give some certainty where he don't have to have a lot of pressure for investment. So he didn't take the active trading seriously. Until recently, he came for refreshing on some of the trend trading, the midterm and short term. He says, now I have a strong why. Because it's very sad for him. There's still another 5 years to go for the kids to finish the international school. It will be heartbreaking to say, stop now, because I cannot afford it. And because of that, he says, okay, I will take my trading seriously this time. So it's very important for you to know I call it the strong why, so that you will take it seriously rather than just, at first he was contented, right? Yeah, 20% return a year. Right? Who is not contented? Pretty good, right? But if you work out your expenses, you realize education is very expensive this day. Okay, especially when you want to send your kids to international school. Overseas education, anyone know how much it costs? Overseas education. Yeah, depending on where you send. It could be 100,000 to 200,000 ringgit a year. In the US, it's 180 to 200,000 ringgit a year. Right, school fees plus boarding and everything else. Australia could be between roughly 150,000 a year, depending on whether you have 3 years or 4 years. Right. So how many of you aspire to send your children overseas? I see some of you here. Yeah, or even local private education. Yeah, I have two of my staff from Taylor's College. Okay, it's 80 to 100,000 for the 3 years course. Right, it's not cheap. Right, so you need to understand what is your objective. If this is one of them, I would encourage you to take it seriously, and it can be achieved. Yeah. So know your strong why, what you're doing it for. Yeah, so that you don't trade like hobby. And anything that you want to achieve a success, it has to be predictable. Do you agree or not? You cannot leave it to chance. Oh yeah, I want to send my kids to education, or I want to be financially independent, but you don't work out the numbers, and you are hoping that one day you will get there. It doesn't happen that way. Right? You have to calculate it and see whether based on your capital, the returns you can get, with all the extra money you can save per month to add up, will you get there? Okay? Once you are so focused, you'll be amazed with the result. Yeah. You need to be focused on really work out the numbers. Yeah.
Thanks for that.
Yeah.
Always plan and work it out for
Yeah.
yourself and determine as well, not just your personality type,
Yeah.
but yourself, right? Knowing
Yeah.
your values and being guided by that for the long term.
Yeah.
Now, Dennis, do you have anything to add to that? Because I do want to go to the next question.
Oh, I agree that education is expensive.
Yeah.
Excellent, Dennis.
Yeah.
Now, next question then, we covered the poll already. We'll have a second one towards the end. We're talking about the themes. Now, you brought that up at the beginning, right?
Yeah.
The market themes from a
Yeah.
macro scale. Now, we're talking about AI and also the digital tools here. Now, how can then, we envision these technologies reshaping investment education in Malaysia on that particular point? And what steps, I think practically, should be taken to ensure that all investors, regardless of their experience level, can leverage on these potentials?
Yes, actually, honestly, I'm very glad that we have broker platform, advanced tools like moomoo coming to Malaysia. For a long time, as I mentioned earlier, I started trading with calling the brokers, right? Yeah. So, and I'm from IT, I do it myself, but there's not a lot of software out there at the time. And when you want to do more research in the past, you have to read annual reports. Okay, but these days, if you use moomoo platform, you realize that they are very fast. Okay, right after earnings, you get a report summary from them, and you have even the breakdown of the revenue, expenses, their track record on the graph. Very easy, very convenient, right? So I mean, a lot of people don't like to read annual reports, and that's the part where deter people, especially youngsters, to go into trading. But actually, these days, the tools are very intuitive. And I do advanced research on industry dependency, and moomoo have a tools where I can know what is the correlated stocks to AMD, right? So let's say or Nvidia. If I miss Nvidia move, I can still trade AMD. If I miss AMD, I can still trade 𝘊𝗋𝗋. If I miss 𝘊𝗋𝗋, I can still trade TSMC. And those tools are not available during my days. Yeah, I'm at old times. And right now you can go to ChatGPT and you ask, who is the strongest competitor of AMD? It will let you know, right? What are the strengths and weaknesses? Give me the SWOT analysis. In the past, we cannot do that. So that's the advancement of tech. Now you have all these tools that there's even social media sentiment, right? What people are talking about that may move the market. Yeah, so many of these tools where these days, I think to get information for investing and trading is actually so much more easier. However, it creates another problem. You get too much information and you don't know how to digest that. And you could be bombarded by a lot of opinion, right? If you go to Market Watch, CNBC, sometimes you get doomsday news. Some say the market will be, how many points higher by end of the year. Then you have another one that's saying the market is going to crash. Then you'll see another recession fear. Okay? So during my earlier days, I get affected by this. And now I don't, okay? Because once you educate yourself, you know what is considered noise. Right? And I differentiate news, which is facts, versus opinion. Right? You read opinion, but don't get affected because it's just an opinion. Opinion don't move the market, buyers and sellers do. So you read the stock chart, it will tell you whether people are buying or selling. Right? So I always tell a student, it's not about the news. Right? Just like just recently, the CPI came down recently, the inflation came down, but actually good for stock market, right? On that day, the stock came down. But then after I have a strong rebound. What's the reason? Right? So there could be many factors. So what I have realized is if you need to put in the time and effort to understand how it works. And do not let yourself be worried about the fear. Right? Despite all the tools and technology that moomoo and many of the all these it could be ChatGPT, and there's another site called FinChat, right, where you can do a lot of research, AI-based tools. But despite all that, you still need to have a systematic way to approach it. Otherwise, you get drowned with information. Okay, so that's what I would advise. And it can be learned. From my experience teaching students, one of the things that hold people back is fear. They are so fearful of losing money, so fearful of making mistakes. And that's why I'm so glad that moomoo have what we call a paper trading account. Right, paper trading, you can learn safely. Who here has fear losing money? Raise your hand. Yeah? Who don't have a fear? I'm sure a lot of you have, right? Especially when you're new. So I highly encourage you to explore trading if you have fear of losing money, fear of making mistake, right? Still approach and learn it and use paper trading. get used to the platform. And so you can learn without worry about losing money. Right? That's number one fear. The second fear that a lot of people have is the trading platform. Their fear of technology. Right? So we have quite a wide age group, all the way from 11 years old to 75 years old in our student base. Majority as a center. So a lot of the later generation, they are fearful. Right? So even with the digital world right now, after the pandemic, a lot of people go online, but we still have a full house for face-to-face right now. Like about 80 plus of them still prefer face-to-face, 100 plus online. And they need that hand-holding, right? Just teach them step by step how to use the platform to make them feel comfortable. So I think it's about don't fear technology, right? I think it's a younger group here, but if you are still fearful of how to apply account, moomoo account application is one of the easiest I've seen. I've used so many brokers. I think it's the fastest account application and funding you can find. And the tools are user-friendly, especially the mobile, right? So don't be afraid of the learning curve, right? It's as in anything. Before you learn how to drive, you have a fear. Once you learn how to drive, you can even multitask. Although I don't advise you to do so, right? Some people like make up and all that, eat burger. Yeah. So remember, the learning curve, you will get past it. Do not be stopped by anything, because I personally totally believe that everyone needs to learn how to invest, at least. Trading is optional. But if you have time, you can learn trading, especially if your account is small and you still want to make it big. But trading is more emotional, right? You need to take more time to learn and systematically learn about trading. I highly encourage people to have certain buckets on investing, certain bucket trading, but do not be so fearful. Paper trading help you to overcome that, and don't be fearful of technology as well. And be willing to accept that, understand. Okay, last thing I want to share is, based on a lot of people, when they come to trading, number one problem is they have the wrong understanding expectation of the market. They expect that even if they sign up for a class, I follow step 1 to 4, then it must be a winning trade. Otherwise, the strategy don't work. That is completely not true, especially for short-term in trading. Right? You don't have to win even 80% of the time. You don't even have to win 70% of the time. You can be winning even half the time in 100 trades and make money. Because there's a concept called reward over the risk. If you look at the chart, the potential upside is at least 2 times compared to your loss. Yeah, you must have a stop loss. 2 times. 1 win cover 2 loss. 1 win cover 2 loss. If you have a stop loss, okay? That means 1/3 right, break even. You only need to be 1/3 right. 33% right, you break even. 40% right can already make money. 50% right, you can even make more money. Right? But people don't approach it this way. They are so fearful of taking a loss. Professional traders don't think this way. Because even the top trader is only 67% right, short-term trading. Top trader. Majority of fund trader are only 50 to 55% right. But they have a good reward over risk. When they win bigger and they cut loss. Right? So if you approach this thing, I'm not so fearful of, oh, this is a loss, this is a win. And the reason people get so emotional factor is they are so attached to this trade win, this trade loss, this trade loss. Right? You have to see things as a basket. Overall, your portfolio win is the right way. Right? So that's why I hope you learn what is the right expectation for the market, so that you don't get disappointed. Some people, they say, oh, loss. I think I better don't trade. They give up too early. Right? But that's the wrong way. So I hope that you don't give up easily, because this is actually a very interesting journey. Right? So I mean, I would suggest that you approach it 4 ways. One is understand your strong why. So you know why you are doing this, you won't give up. The second one is build an interest for it. To me, it's a very interesting subject. Okay? And every year you have something different. Okay? Number 3 is you must prioritize. Number 3 is you must prioritize and make time for it. Put in your calendar. This is my learning time, this is my trading time. I block my calendar. Even after 31 years trading, my calendar is still blocked for my pre-market and actual trading. Okay? And number 4 is you must believe that you can do it. Okay? You must believe that if someone can do it, why not you, right? It's just about learning it properly. And with that is, don't wait until some other day, right? Tonight when you go back, you commit, right? You work on your financial plan and you work on your strong why. Though every time people procrastinate, they never do it. Do you agree? Right? So I hope, how many of you are committed to take your investing journey seriously? Raise your hand. I turn the person next to you and say, I will do that. Tonight I'll do my financial plan. Okay? Yeah, so that's what I advise you to do.
I just want to add on what Kathlyn says. moomoo just provide free learning lessons. I think
Yeah.
Kathlyn emphasizes a lot on learning.
Yeah, yeah.
So do take our free lesson. There
Yeah.
are more than 200 free lessons in the app itself.
Yes.
It will help you to make a better investment. So please go and take it.
Absolutely, and thank you. Very
Yes.
comprehensive and
Yeah.
powerful as well. Some
Yeah.
key learning
Yeah.
points there. And of course, I think I do want to extend the conversation to perhaps diversification, because that's a term that I get a lot on the live audience show. So Dennis, moomoo has been at the forefront of introducing diverse investment options, and actually you also covered that during your keynote, right? So how does the variety of options enhance the concept of diversification, and why is it increasingly crucial for Malaysian investors?
I will just quickly answer that question, but before that, I just want to share something very interesting. Every time I meet my founders or senior managers there, often or not, they always ask me, I say, Dennis, how can we improve the user experience?
Okay.
How can we improve the business process? How can we be innovative? So that's a clear tone from our top management. So that's what we committed to provide the best possible resources and tools for Malaysian investors. So in terms of why diversification is important, it's crucial. In the past 6 months, we have actually introduced various products and markets for Malaysian investors to manage their portfolio as well as their solutions. This will help investors to diversify, reduce the reliance and dependence on a certain product or market. At the same time, also help them to find new investment opportunities.
Thanks for that. Now, next question for Zeff. The recent retail trader survey highlights that Malaysian investors are particularly interested in the big 4 sectors. Now, from your
Both of these, like AI and so-called renewable energy, the big team, the mega trend, is a multi-pronged catalyst team. So some of the investors, they still believe that the trend can still continue, but bear in mind that, in my opinion, every stocks or every upcycle in a specific sector, it does have its own cycle. So we have to exercise more cautious whenever we put in extra monies into this sector, whereby maybe back in a half year or even 9 months ago, when the team was not that hot, you can actually put in, like for example, 20 or 30% of your capitals into the sectors, whereby at this current stage, in my opinion, I would say that if I were to join the run, or if I am still optimistic about the trend of this sector, probably I will reduce my exposures, because as we know, next week the Fed is going to reduce the rate, and whether it's going to reduce by 25 basis points or 50 basis points, that's crucial to decide the next stage of market movement. And then for the healthcare and financials, why these two tops the list? Because both of these, they are known as so-called recession-proof. Whenever the market is risk-averse, some of the funds they will shift from growth sectors to conservative sectors. We all know that for healthcare sectors, most of the companies operate inside these healthcare sectors. They do have some forms of so-called recession-proof, whereby even though during the good times or even during the bad times, people still have to go to the clinics, go to the hospitals, and the revenue generation still going on. Whereby for financials, recently, you see there are in local market, in Malaysian market, starting from early of last month, whereby the 5th of August, when we witnessed a sharp drop, a sharp correction in the market, most of the monies, especially even the foreign funds or local institutions, there is a great shifting from growth stocks to conservative stocks, especially to banks, financial institution stocks. So we see the stock price such as CIMB, Maybank, RHB banks.
About every day so far on our community platform, you brought up a previous point, Kathlyn, as well, about fear, right? Emotion.
Yeah.
So I know a lot of the live audience as well has submitted their questions. How do I really manage my emotions when I'm investing? The opposite of fear is also the idea of greed, right? Which is also a struggle. I think a lot of the investors face where they're just jumping on bandwagons and just following the crowd. Now, how can they really help themselves manage this from a practical perspective?
You mean how to manage emotions? Psychology is my most passionate topic. Having traded for many years, I will say that once you understand, once you pick up the fundamental technical skills and how the market works, 90% of your success is psychology. 90%. That's very big. Yeah. Because and also after teaching for 16 years, I realized this too. It's not about what I teach my students. It's about whether they can follow it. And I was curious, right? Why I teach the same thing, but not everyone execute the same way. It's because everyone has their own belief system, their own greed, okay? Their own ability to follow the rules. I could be giving the same rules to all of you, but you could have executed differently, right? Because each one of you, you could be, some could be a bit worrisome. Even though the signal is there, you don't execute, right? Some could be signal not there, half there, and you execute. Okay, that's called the FOMO, fear of missing out. So one way to overcome this, and also from my experience starting without a trading plan until the point where I learned enough mistakes, is you need to have an investment and trading plan. Yeah. So before you start to buy, you need to have a plan. Why am I buying here, exiting here, and where's your stop loss? So that actually helps you to overcome that emotions, right? Because if you just start opening the stock chart and you decide from there, you will get emotional. Because it's not well thought through, right? After you have a process to how would I screen the stocks, and from the stock I selected the strong fundamental, then I look at the chart. Based on the chart, how do you time it, and what's your risk management, right? So you can put it into a simple plan and you lock it before you enter. Before you buy, you will need to know where's your exit point, where's your profit target, how many units, right? You know the max quantity you can buy. Yeah. So then at least you already are prepared before you go in. Even that, you can still get emotion when you see the chart start moving high. But what if you did not have a plan? Right, you'll be worse. You'll be chasing after the market. And that's why for the most emotional trading is called intraday trading, where the candle is moving while you make decision, right? So right on market open, I'll ask our new student for intraday, don't trade in the first 10 minutes, okay? Because the market, there are professional traders that will push it up, then it comes down. So you need to know your strength, right? If you're the type who cannot manage emotions, you need to make your decisions outside of the market hours, okay? So that you are calm, you look at the chart, it doesn't move, then you really know where you then market open, you just need to fine tune it a bit. Okay, you don't keep. I started with trading a lot of forex during my early days. Right? I traded many instruments like stock options, forex futures, you can name it, and Malaysia market, Australia, UK, global indices. Only to realize that you need to know who you are. Right? If you know that you cannot stand that every day looking at a stock chart to tempt you, then don't do it. Right? Don't expose yourself to your weakest point. Focus on your strength, but it can be managed, and that's why after that I attend a lot of psychology course, okay, NLP. I'm actually a trained NLP master coach, and psychology to help myself. So as I mentioned, the tips here is have a trading plan. The other one is the strong why, not just the strong why to invest and trade, but the strong why you need to follow the rules. What is this money for? It's for your children's education. Do you want to take so much risk? Do you want to do gung-ho trading? Right? What is the funds for? Or is it your play money? Right? That's different, okay? Yeah, so you need to have something that keeps you in check. So there are many ways in psychology to do that. One is having a clear idea on what the funds is for, how important it is. The second one is your identity. What type of trader do you want to be, right? You want to be a bad example or you want to be a role model? Right? So for me, I'm an educator. And that's one way to keep me in check. Because I cannot be telling everyone to follow the rules and I don't, right? Then it's actually hurt inside. That's one way for me to keep myself in check, right? So you need to know, do you want to be a role model for your children, right? Being a great investor and trader so that next time they can model you. So, and I think that's very important because in trading, there's tons of temptation, right? Greed is your biggest enemy. The next one is fear. Yeah, there's no like 100% foolproof, even for myself, trading over many years. It's still something I have to keep reminding myself. Right? Do you agree? Yes.
Couldn't agree more, Wei-Bai.
Yeah.
In my opinion, I would say that the greatest things that help us to overcome fear and greed is a good strategy to put in place.
Yeah. I have many people who came to me and said, "Oh, I'm still holding on to my top glove. How should I get out?" Then, top glove, right, it's the pandemic is over. Why are you still holding on to it, right? Then it says, no, what do you think of the future growth? Why are you buying the stock in the first place? But that's already over, right? Don't talk about the history. So I will ask a question. What's the probability of you that this stock can help you to recover if you continue to hold on it, compared to you start from scratch to search a better stock? That the fundamental is good, the growth future is good, so then you can sell this and go there. But the automatic response I get is, but I really lose so much, how to cut? Right? Because people just emotionally attached, because when they cut, they feel that I'm wrong. I don't want to admit. I still want it to bounce back so that I'm right. But that's a very bad behavior. That's not going to help you to be achieving consistent success. Right? So this, if it is a very common problem, right? People buy, then didn't cut on time, then the lower it goes, cannot cut. So one way to overcome is ask a great question. I learned in psychology, if you want to trade well, learn how to ask a great question, not a stupid question. You know what's the difference between a great question and a stupid question? So we teach our students, we ask the 3 questions. What is the trend? The trend is up. Is there a pattern to trade? Yes, there's a certain pattern. Is the reward always good? Yes, then trade. But they ask the 4th question. Will this go wrong? What if tonight hit my stop loss? What if tomorrow there's an announcement? Then they will never trade. Okay? Yeah. So then the other one is, if you already in a loss and you don't have a stop loss, then you need to ask a better question. Yeah. If you continue to keep this, what is the probability of going up to recover versus you cut it and you start with a better stock, right? Then you should know the answer. Okay? Yeah, so the great thing about 𝘀𝘁𝗏 psychology is has a lot of handful great questions to ask yourself. I also ask myself, because George Soros is my role model. He can cut even though he has $1 million of loss, but to him it's 1-2%, okay? So I said, what will George Soros do in this case? I ask myself. Then I know his automatic answer is cut. That I have all this standby for myself when I have tough decisions. Yeah.
So interesting, because I had an investor actually write in once and actually said one way he manages that is to really find a way to admit that he's wrong as soon as possible and then get out, right? So he's sort of like, you need to be bold, but at the same time you have to be radically honest with yourself. And see whether that's also aligned back to the core values that you brought up as well, right?
Yes.
Now, I do want to wrap up this discussion because we're running out of time, but thank you so much for being on the panel, and of course, everyone coming in and also just listening so intently. My last question is for you, Dennis. Okay, last 2 questions. So the second last question, now you're talking again on the technology point, as a platform that serves a diverse investor base, how does moomoo leverage technology to cater to the varied needs and expertise levels? And at the same time, I think it's really about democratizing access to the sophisticated investment tools that we have. And let's just try to tie it back to whatever we talked about with platforms as well.
Without further reveal too much information to our peers and competitors, I think in short, we are committed to make investing easy. I think in the short run, we are going to introduce better AI technologies, further improve automations, and also introduce more product as well as market for Malaysia investors have different options. And the most important to me is continue to work together with the key stakeholders, like regulators, to improve the financial education through via technologies for Malaysian investors. I know that will be more.
Thank you so much for that. And final question, of course, with every panel, let's see your key takeaway for everyone listening right now. What is that final point you want them to bring home with them? Zeff.
Okay, the first thing is that before we earn money, we have to put a letter L in front. That is learn. Okay, this is very important. I remember back in 11 years ago when I met a sophisticated investor, a prominent investor. This is the first lesson he taught me. He told me, don't buy stocks blindly, don't follow tips blindly, don't just read news and buy blindly, but you have to know how the stock market is operating. You have to know what actually drives the stock price to go up. Is the past data that drives the stock market, is the past data that drives the stock price to go up, or is the future expectations that has been built up on the stock? So this actually make me suddenly awake, and I know that that's the prospect of a stock or sector that actually drives up the buying process into the stock. This is very important, and you have to put a lot of efforts into learning this. And it is not overnight you can master the technique. You have to build up your experience via more exposures, like for example, following my Facebook or moomoo. Okay, if you haven't followed me, just type my name in Facebook or in moomoo, then you will see the same face. All right. So the second thing is that, back into the points that I mentioned in the beginning of this panel discussion, is that you need to really define who you are, find out your personality and your financial goals. And after that, you need to construct a strategic approach. Not only strategic, you need to be systematic as well. For example, when you decide to shortlist a stock, so it is based on what? Based on the macroeconomy, and then you shortlist a few potential stocks, and when you screen through the fundamentals and technical charts, and then you have to make a plan. So if I go in, so what if I make a wrong decision? What should I do? And then not only that, there is a saying that if you know how to shortlist and to buy a stock, you are considered a novice, just a normal people. Only if you learn how to sell a stock and take profit or cut loss, then you are a master, also called a sifu. And this is really important because I've came across a lot of so-called my subscribers or students whereby they came to me and show me a full page of portfolio whereby it is more than 50 stocks. Then I asked him, what is your motive that you come to stock market? He said, I want to make money. Then I immediately replied and I respond, this is not make money, this is like collecting stamps. So collecting souvenirs. So you are not come to you do not come to stock market to collect souvenirs, no. You have to make money. So in order to make money, you need to really have a plan. Right? Thank you.
Thank you, Kathlyn.
Yeah, my advice would be you have to think about whether you want to take this journey seriously, right? And if you want to take it seriously, you need to ask yourself, how do you want your journey to be, right? Do you want to just explore things yourself? These days there's so many materials, so much material you can find from moolearn, from YouTube, and a lot of channels. But from my past experience, and if you do this, that's great. It's still good that you start learning, but it's going to take a long time for you to piece things together. Because even in the past, when I attended 11 different trading courses, right, it still need a bit on myself to systemize what suits me and ultimate approach. Okay, because I in the past, I don't see a very systematic process for learning. So you have to decide whether you want to take the shorter journey. You know what's the shorter journey? You find out which which role model or trainers are closest to the match to your trading style. Okay, so this is what I learned from Tony Robbins. He's one of my role model as well on psychology. He says, find out who your role model is and find the shortcut, because find someone who is already there. Whatever you want to trade, whether you're long-term, mid-term, short-term, right? Find someone who is already there, and they can help you to shortcut the whole process rather than you dabble around. It's not that you cannot do that. It just takes a long time, right? So you have to decide which way. Of course, going for education, there's a price, but to me, it's worth, because I paid so much tuition fee to the stock market as well. Okay, it's whether you pay for proper education or you pay the stock market. Either way, you will pay. And to me, do you want to waste another 5-10 years, like figuring things out yourself? And that could be risky. Okay, so at least go back and figure out whether this is something you want to take seriously, and I encourage you to do that. Take your investment seriously, because the wealth gap is created because the wealthy, they invest. The rest, they just work. Understand? It's very hard to build your wealth by just working. Let's think about this. I hope that this gives you a chance to take it seriously. Are you up for that? Think about your pay. How much is the increment in normal company? 4 to 6%? Unless you have a promotion, okay? What is the inflation? 6% at least. Your savings in the bank, 3 to 4%. Okay? How are you going to grow your wealth? Do you expect that someday, somehow, you're going to have a 30%, 50% increment? Right? I'm not saying that you quit your job. The job gave you security. Right? The job gave you a chance for contributing. Right? All of you have certain expertise. But if you don't invest, you will not be able to compound your wealth. It's just about which vehicle, right? Whether it's stock market, real estate, commodity, and so on. But for me, I've traded so many instruments. Stock market is the most consistent. I hope you can shortcut that. Why stock market is the most consistent? Because it has fundamental. Cryptocurrency is speculative. Okay, you need to be prepared for that part. 10% of portfolio is still okay, right? Forex is designed to be stable. Okay, although sometimes it trends. Only stock can continue to trend up. You will find a company that are making money and every year they are profitable plus they are growing. Then only it can go up. Although the market has some cycles, right? So over the many years, I cut short from trading so many things to stop being the primary, because you can invest or trade. Okay, so I like all of you to go back and think about, if you are not investing, what is your plan to grow your income? If you can answer this question, that's fine, right? If not, take it seriously. Have a plan and really educating yourself properly, so that you don't waste time. Yeah, thank you.
Thank you, and of course,
Yeah.
you.
I just want to add, adding to what Zeff and Kathlyn has shared in terms of the key takeaway. I just want to add 2 sentences. Give us a chance. Give moomoo a chance. You will love it. You will love our app.
Yes.
Thank you so much.
Zeff,
Thank you.
Kathlyn, and Dennis, everyone, a round of applause. Thank you so much for being a part of this.
Yeah, thank you. Oh, okay.